India's GDP growth will be moderating to 6.5% in financial year 25. That's the word coming in from Morgan Stanley, who's flagged the risks that are emanating from global factors and the upcoming elections, not just in India, but also in the US. Literally one-third of the world, or more than one-third of the world, is going to go to elections in 2024. Krishna, will have an impact, of course, on various economies. But Morgan Stanley, underestimating India's growth to the point of 6.5%, 6.9% for this year, 6.5% for the next financial year. What exactly is happening here?
Right. They're talking about the fact that there are certain economic issues or factors that are playing a part in this. And in fact, 6.5% is what they're saying for financial 25. For Q3 FY24, they're saying that the growth could come down to as low as 6% on a year-on-year basis, as compared to last year when it was 7.6%. It's going to be 6%. The factors that they've been alluding to are things like an uneven monsoon, slowdown in industrial activity, slowdown in agriculture. So all of these factors are contributing to India's, this 6% odd growth rate that India is likely to notch up. But none of this has meant that they have, lost faith in the overall strength and the overall, tenacity of the Indian, of the macroeconomics of India. So there is.
And just to add to that, these numbers are also revised on a quarterly basis, and they're revised on a half-yearly basis. Right. And the possibility of that revision we've seen last year, where the growth came in at about nearly 7.6% in last financial year. India is suggesting at the moment that we will grow anywhere upward of 7%. There is a huge delta there of 0.5%. Where will India catch up? If you look at what's happening globally, there is softening of the global commodity prices. India's trade deficit is looking very benign at the moment. Our services exports continue to be robust. So overall, GDP is looking good for India. Right.
And these temporary blips, if I may, and these are temporary blips that are spoken of by Morgan Stanley, whereas there has always been a difference in the way India expects itself to grow and the way the world is expecting India to grow in recent past. There's from ratings agencies not rating India, giving India the right kind of rating to, there is a lot of questions on the way the skepticism over India's growth, and and even this Morgan Stanley report is talking about risk factors like elections across the world. As far as India is concerned, India is very confident about what's going to happen as far as the elections in India is concerned. So in fact, there is a lot of optimism being driven over here. You're talking about India's stock markets, already factoring in the fact that, the NDA is going to get 400 plus seats. There is a lot of optimism that's being built into the Indian stock markets and as an Indian economy. So the way India is expecting itself to grow is certainly a notch, if not several notches higher than what the world is expecting to grow. Maybe there are risks as far as global other elections are concerned. We don't know what's going to happen in the US elections, because the US is jittery for sure. It is the biggest economy in the world. It is, in the sense that whatever happens, the US has an impact on everything across the world. So I think the uncertainty that Morgan Stanley is alluding to is the uncertainty in the US elections, not the uncertainty as far as the Indian elections are concerned. The Indian elections seem to be a done deal at this stage. I mean, I'm no crystal ball gazer, but I'm just talking about the optimism that's coming in from stock markets to nobody's expecting an NDA, NDA to not win. It's a question of how big a victory it can notch up. That's the kind of parameters that we're discussing with over here, with just about a couple of months to go for the 2 to 3 months to go for the elections. So yes, there are risks involved, because at the end of the day, we live in a globalized economy. So what happens in the US will have an impact on India, will have an impact on the investments coming into India. So India does have those global risk factors that it will need to look forward to in terms of how to mitigate them. But as far as the core innate strength of the Indian economy is concerned, there might be temporary blips because of uneven monsoons to a bit of a slowdown in industrial activity. But as you're already pointing out, the deficit, the trade deficit is fine, services exports are fine, and will only get better from here on. So in that sense, we need to take all of these predictions and projections of India's GDP growth with a pinch of salt, if not more.
Absolutely, with a pinch of salt. But here's what Morgan Stanley is saying at the moment. Morgan Stanley continues to maintain that India is going to grow at 6.9% in financial year 24 and 6.5% in financial year 25. This on the back of the fact that, as I mentioned, US is going to elections, India is going to elections, and there is a lot of global uncertainty which is playing out at the moment. Also stating categorically that while first half of financial year 24 is looking good, second half could be a dampener or play spoil sport.